Welcome back to Trading Day. I'm Amber Kanwar. Toronto home sales were higher in June, up 4.2% from the month of May. This, of course, comes after the Bank of Canada eased its borrowing costs. It was the first monthly increase that we saw since January. Now, year over year, home sales still down 16%. Condo sales down more than that, down nearly 30%. Let's get perspective from Jim Ritchie, President and CEO at Tridel. Thanks so much for joining me.
My pleasure.
So you're a developer of these condos, primarily in the city. Talk to me about how the market feels from your perspective.
Well, so today's numbers are reflective of the resale marketplace, not of the new home industry, so a little bit of a nuance there. But it's not something that was unexpected. Clearly, interest rates have everything to do about what's going on here. What's interesting, I mean, we're seeing on the resale side, there's more supply, partially because our industry is delivering more product, has delivered tremendous product actually in this first half of 24. So that is contributing to supply for people that are on the resale side. But prices are reasonably stable. They've moved off a little bit, in some cases, depending on which submarket you're talking about, but generally at 1% or sometimes less. So that number is encouraging, at least the value of the homes.
You've got a line, I think, a pretty good one on pent-up demand, right? I mean, everybody does want a home. I think that's not the issue.
Right.
It's just, can they afford it? When are they willing to step into the market? When will affordability allow it?
Right.
How meaningful would another couple of rate cuts be to that?
Well, I think we need more. I mean, clearly, I don't think you're going to have anybody challenge me on that one. 25 basis points is not moving the needle enough. Probably has to be 100 basis points, maybe a bit more, where we would see a significant shift just in consumer confidence as a start. Clearly, affordability is the big picture. It's also a period of adjustment. I mean, I think the overall marketplace will adjust even in terms of consumer confidence when we have some stabilization with interest rates that do trend slowly down.
Now, as a condo developer, you're supposed to be part of the solution, right? In creating more supply. Yeah. And so I want to unpack the trying piece of it. What's making it difficult? Because there have been a lot of things that have been done to try and make it easier for you.
Well, quite a bit of what we've seen from government policy is really directed to affordable rental housing. There's nothing there that's being offered to support our industry. And where I think we need help is to work on the affordability side, specifically in terms of the amount of time it takes to get to market, the amount of regulation and planning philosophies that we have to work with. You know, we get into setbacks, stepbacks, different things, angular planes that affect the built form that sometimes add to the cost and to the time it takes to build. And we've got an affordability challenge just in terms of government fees and rates. It may not surprise you to hear that almost a third of the price of a new condominium home in the marketplace is tied up in taxes, fees, and things like that are overall challenge the end price.
And I imagine an interest rate cut then I guess would help on that cost side of things. I mean, how many projects do you have shelved or waiting to go relative to what you're developing right now?
We've got a pretty robust portfolio today in the marketplace. We have 17 communities in the market today. We have 2 that are just about to start construction. And the balance are either in construction or we are developing the product today.
What's the pre-sale like right now on units? Is it more,
Pre-sale is...
I imagine it's more subdued than it was a year or 2 ago.
That's a good way to frame it.
Yeah.
I like that word, subdued.
Okay.
Yeah, it's not performing. It's obviously below. In our industry, we tend to look at a 10-year average. We've had, a month is a very short period of time, so it's hard to gauge on a month. But year to date on the new construction for condos only, it's about 2,300 sales to the end of May. We won't get numbers for June until the latter part of this month. So that's about half of where the 5-year average was. So it's significant, but there still are sales happening. But it's clearly, since we started the interest rate adjustments almost over 2 years ago, we've seen that slowdown month over month. So we're well into this.
I guess I'm trying to understand who's out of the market. Is it the speculators that, certainly caught the ire of governments a couple of years ago?
Right.
Is it foreign investors? And there's been a number of measures enacted to try and reduce their demand. Or is it just everyday Canadians not feeling confident enough to buy into these units?
So, you could check the boxes on all three. The foreign buyers has not been significant for a long period of time. And now it's not even possible from a legal perspective to sell to a foreign buyer. So that's a very small piece. The bigger piece is the investors. They are taking a pause. They don't understand the implication of the interest rates. They see it on the short term in terms of affordability and a disconnect with their cost to carry and what they may be able to get in a rent. But there's still a good marketplace for people that want to live in this as their primary residence at all different ages, all different demographics. And I don't frame our marketplace as one. What people mostly talk about are small suites, tall buildings sold to investors. But we're in a very, very large geographical area. We design product that's for different buyers depending on where the community is. So something that we would go to the market with and that might appeal more to an investor in a downtown core in a small suite would not be the same that somebody's looking for, say, in Thornhill in a large end user product. Because that marketplace is still there.
Talk to me about how immigration factors into all of this.
Well,
all we talk about is there's so much demand. So why does an investor feel like, and that rents are sky high,
right. Why
does an investor feel like they can step in front of that?
Because
Isn't that easy
the shock
money?
of the amount of interest rate increases over the period of time have just created a complete erosion of consumer confidence. They're just not sure, is this the best time to buy? Am I buying today and the price is going to go down? Is there, as most investors would like to buy today and know that when we deliver the product to them, the price is considerably higher. So we're in an environment where there's a lot of uncertainty. So we need more interest rate decreases, and sooner rather than later.
Office is an area of the market that is particularly challenged. One of the things that gets floated around is condo developers will just buy those buildings and convert them to condos.
Yeah.
Are you having any of those conversations?
So
is it realistic
we looked
solution?
at the conversions. The conversions are tough. The floor plates are really different from an ideal floor plate that we would want in a residential application. I know that the City of Toronto is looking at policy to permit, at least on a trial basis, a conversion of an office use. So you would demolish the building and then design appropriate floor plates and a building that's conducive to residential. But it's not going to come without a cost. I think they're going to look for a component of this new building to have affordable housing, affordable rental housing, probably 20 to 25% of the original GFA of whatever that office or in the employment use is. So that's tough also to make that math work just yet.
Jim.